So some of you know who I am. I'm the president of the Latino Chamber of Commerce. I have a very diverse background and also the founder of the Latino Entrepreneurial Network. I'm a business owner and I will be moderating this engagement for you today. So the mission of the Chamber is to foster economic development of Wisconsin by advocating, strengthening, and promoting the growth and development of Latino and other minority and emerging enterprises, with the goals of providing increased access to capital, business opportunities, job creation, and capacity building programs. Through our Mas Fuertes initiative, we have been able to provide to small businesses microfinancing, micro grants, and now we're providing this great educational series for you in a bilingual format. Our partner on this series is also the Latino Entrepreneurial Network, whose mission is to promote entrepreneurial awareness and education through bilingual coaching, professional development, and networking. To reach us, this is our information, which we will display later as well. Now I'm gonna switch and allow you to meet our guest for today, Maria Valentin. So she will introduce herself to you, and then we'll start with her presentation.
Awesome. Thank you, Nelson. My name, like Nelson said, my name is Maria Valentin. I work at Associated Bank. I've been working for Associated Bank now 6 years, 6.5 years. Actually, it's going to be 7 in January. I've been working in the CRA side, helping with the home buying process. I've been in banking since 1989, so all I know is really banking and mortgages, and I really, really enjoy and I am very passionate about helping, especially our first-time home buyers that need a little bit of more of the hand-holding. In my presentation, we're gonna go about, we're gonna talk about different things about the home buying process, things that need to be done. Last time I didn't cover something up front, and I wanna cover that up front now, so then we don't have to worry about it later. Things that we loan officers don't usually talk about, is not talked about often, but can be an effect during the home process. So one of them being not depositing cash when you're in the middle of purchasing a home, not applying for credit. Believe it or not, I had a situation that happened to me today. The customer went and applied for credit the day before the closing, and that can all be a potential problem, and that might keep you from closing on a mortgage. So please, if you are thinking of buying a house or you're gonna be in the process, those things, do not do them, because it will make a big impact. Another thing recently that's happened that I've noticed, moving money around, selling stuff and depositing cash, none of that will help us with, through the whole process when you're in the middle of buying a home. But anyway, we can start the presentation now, if you don't mind. And we'll go in. Can we go to the first screen also so they can see my contact information? And the first slide, we're gonna have my information, my office number. I'm usually here from like 8 until 6 p.m. Monday through Friday. Saturdays, I do work, but that day I do not answer calls, because that's the day I use to kind of get caught up and get my things up to date. So there's my email address and also my website that you can go into if you decide that you're ready and then you want to apply. All right. So the next screen, we have renting versus buying, what the benefit of buying is versus renting. When you buy a home, you have, it's one of the first things is a very smart investment, especially nowadays. The values are increasing every day pretty rapidly. I mean, doesn't mean that they cannot also decrease, but right now what's happening is everything is going up and in value. So you can build equity on the property, meaning so that, if the values keep increasing, that's money that you have as equity, as an investment for your future. Interest is typically tax deductible. However, I always say to talk to your accountant, talk to Nelson, and Nelson can give you a little bit more information about that. Since I'm not an accountant, I really don't like to discuss that topic too much, but most times interest paid on a mortgage is tax deductible. So that's another benefit. And the one that I enjoy the most is that I can paint my house whatever color I want. I can do whatever I want at the time I want without having to worry about the neighbor or you know, worry about your landlord telling you cannot paint this wall a certain color, if you have the music too loud in your home, things like that. So be mindful, you know, the music too loud, too late at night, the neighbor can call the cops still, but you still have a little bit more control when it's your own home. So on the next slide, we're gonna discuss, are we ready to buy? Are you ready to buy your first home? Oh, what happened to my screen? You guys can still see me?
Yeah, I can still see you, and the presentation is up.
The presentation is off?
Is up. Is
Oh, I lost it on my end, but as long as you can still see me and hear me, then I'm okay, right?
That's fine.
Okay. So are we ready to buy a home? So what we're gonna look for, I'm gonna look at my screen because I can no longer see the screen for whatever reason. I don't know what happened. So we're gonna look for different things. We're gonna look for steady income. And what does that mean? Steady income means we're gonna look for 2-year history for your employment. We're also gonna make sure that you're not working at a temp agency, moving from agency to agency. If you're working at a temp agency and you've been at the same agency for 2 years, we will still consider that as steady income. But we always are going to look for 2-year history, 2 full years of tax returns, but a 2 full year history also. So if you have 2018 and 2019 taxes, but we do need 2 full years. We wanna make sure you pay your bills on time. We always wanna make sure that your debts are not too high, so a low to moderate debt. And what does that mean to us lenders? That means no more than 45% of your gross income you should have in total debts, including the mortgage, the car, and whatever else. However, one thing I do like to cover, there are some expenses that do not show on credit reports. So if I tell you as a consumer, you qualify up to a certain amount, it is important that you take into consideration what other debts you may have. For example, daycare. That's a big ticket item nowadays. I know that daycare is very expensive. So I think it's important for you to be mindful and, you know, communicate that information also to your loan officer so you can then decide what's going to be a realistic number when coming up with the final number for the purchase of your home. We always want to make sure you have your own down payment. Us lenders, a lot of times we have grant funds and we have partnerships with different companies such as UCC, Housing Resources and Acts that may have grant funds available. But it is important that you have your own money because those funds are not guaranteed. They're there today, but they might not be there tomorrow. Okay? So that's very, very important. And we always want to make sure that you have the ability to continue to make your mortgage payments. So that's why I always say to my consumers, it's very important that you plan. Planning, planning, planning. That's always so important. Write it down, make a plan, put a plan together. Talk to your financial advisor that can tell you exactly what to do and how to do it. That's going to be super important.
Maria, before we proceed, can you tell the audience what you would require of a small business owner that might not have, you know, check stubs and things of that nature? What will be the process for a business owner?
Most definitely. For business owners, since you're not going to have not taxes, you're not going to have pay stubs or W-2s, we do need 2 full years of tax returns. And if you come to me today, it's already what, September 17th? I'm going to also need a year-to-date profit and loss statement to make sure that the income that you claimed in 2019 is still supported for the loan. So if this year-to-date, you're taking a loss and last year you made more money, we will have to use the lower of the income because that's what you have for this year. So it is very, very important. I cannot reiterate that enough for you to talk to Nelson and make sure that those taxes are done correctly. One of the common mistakes that I see is that they deduct the heck out of everything that you have and then you have zero income. Well, if I show on your tax return that you have net profit of 10,000, let's say, well, that's the income that us lenders will be able to use. We can add depreciation. In some cases, we can add mileage back and so on and so forth. But it is truly important that you work really close with your accountant and to make sure that you're claiming the income that you're going to need to qualify. And I always say, claim the right income, because you know what, that can come back and bite you in the butt. And but you know, it's important that you do things right. You know, sometimes things are not done correctly, and that could pose a problem. One that's happened to me in the past, and I'll mention it: if you receive unemployment and it's not included on your taxes because it was forgotten by the customer or by the accountant, if it's not included, we cannot use it. If it's not in black and white, it does not exist. Okay, I hope that explained that. Probably a little more than you wanted, but
Thank you.
not a problem. Let's see, we're gonna go to the next slide, and I'm kind of lost because I can't see it on the screen, so my apologies. How much money, how much home can you afford? That's the next slide, right? How much can you afford? We are always, like I mentioned before, we're gonna be looking at the 45% as the affordability. It depends on the product also, so keep in mind there's some products that have a little bit more flexible ratios, but like I mentioned before, it's important for you to talk to your loan officer to make sure that you both know what you qualify for, so you can go ahead and determine how much you can afford. We're always gonna look at your credit history, how much cash you have for down payment and closing costs. We're gonna verify all the income. For pre-approvals, we're gonna look at the income, but I always like to emphasize the underwriter is also gonna verify that income. So make sure that when you're reviewing the application, that the income that is being reflected is accurate. Because let's face it, you know, we're all humans, we can all make mistakes, and that's why it's important the customer reviews all that information just to make sure. We're gonna determine your maximum mortgage amount plus how much you're gonna do for a down payment. And that's how we're gonna come up with the amount that at the end you can afford, the monthly payment you can afford. For the most part, it's always gonna be like a 45% back-end ratio, meaning that total expenses shouldn't exceed 45%. But we have special loan programs, and they might be a little bit more flexible depending. It's also gonna depend on credit. So if you have really good credit, they might be, you know, they might be a little bit more flexible on how much more you can afford on a mortgage. Questions thus far?
Nothing yet.
Okay, all right. We're gonna talk about next why it's important to get pre-approved. The importance of a pre-approval is very different things. It gives you the opportunity to determine how much you really can afford. I don't like when customers go shopping without having a pre-approval, because they're like, oh, I'm already looking at homes, but I don't have the pre-approval. And I'm like, how do you know how much you qualify for? So that's what's important, that you go and do your mortgage shopping first before you start looking for a home. Sometimes even before the pre-approval, what I've been doing, if my customer tells me, Maria, I'm not sure if I'm really ready, I might refer you to a counseling agency that does the first-time home buyer classes, that can also look and see if you qualify for other grants. So I might start you there just in case, especially if we don't know the credit part of it, because that's also going to be very important. The pre-approval is also a good tool to show the sellers that you are ready to buy and that you are serious about purchasing that home. And then you learn so much when you're going through the pre-approval process. And most times I am going to refer most of my first-time home buyers to take the first-time home buyer education, because it teaches you a lot of different things, the whole process from beginning to end, and then after, because after you buy your home, you also have to do your maintenance, you have to do other things. And it just teaches you a lot of different things. On the next slide that we have, we're gonna talk about documents that are needed for the pre-approval. And this is mainly where you're gonna submit the loan to the bank. We're gonna need, typically it's usually 30 days of pay stubs. So if you can give me 2-3 months, it gives me a better picture of what how your income is coming in. So even better, but for the pre-approval, actually I only need 30. If you have retirement income, I need that award letter or that retirement statement that you receive every year. and I need also 2 months of bank statements to support that income. I need 2 years of W-2s, and I need all W-2s. So if you're married and your spouse is not applying, I need the W-2s for both, even though the spouse is not applying, because I need to make sure that the W-2s match the number on the tax return. I need 2 months of bank statements, and I need all pages of the bank statements. I cannot use transaction history. So if you get a transaction history, they will not allow us to use it because the bank name is usually not on those. So we need 2 full months of bank statements and all pages. If you have additional income, we need proof of that additional income. If it's cash, cannot use it. If you have alimony, child support, separate maintenance income, any type of income like that, we're gonna need the documentation from the courts, the court document. If it was through a divorce, then I need the divorce documents. If it was through a paternity, then I need the paternity documents. And then I need a 12-month history for the child support or alimony to show it has been received. Oftentimes also with child support, I need the birth certificates for the children because we gotta make sure that the children are still gonna receive that income for 3 more years in order for us to be able to use it in the income for the mortgage. All right, the next one is gonna be, oh my God, a big one for me. How important is my credit? Well, nowadays, credit is everything. We're in America, so credit is everything. I know a lot of times we come from different places, Puerto Rico or Mexico or whatever the case might be, right? It might not be as important, even though I think that's becoming like that everywhere, but credit here is the most important thing. It could affect your employment. It could affect your insurance quotes. And obviously, if you're buying a home. I mean, if you are going to buy a property, you need to have a good credit history. We're always going to look at the last 12 to 24 months. And then we're also going to look at your credit score requirement. The credit score is going to depend, it's going to affect how much you bring down to closing, what kind of loan products you qualify for. So how important it is, it's super, super important. I also have attached a little bit of information of how you can obtain a copy of your credit report. You can get a free copy every year. And I think it's super important for you to check your report every year, just in case, to make sure that there's no errors or there's no someone else's information showing up on yours. I can use an example. I was showing someone else's bankruptcy ones. And I'm like, well, obviously that wasn't mine. So I had to do a lot of research and I had to do a lot of disputes to make sure that was removed from there. And I remember when I was applying, they asked me, well, are you sure this is not yours? And I'm like, trust me, if I file bankruptcy, I would remember. So, that's why it's so important that you check your report to make sure there's no someone else's information showing on your report. Sometimes when you have a common name, that tends to happen more often than not. So keep an eye on the credit. If you don't want to do it every year, at least every other year, just to kind of monitor, making sure that there's nothing there that shouldn't be there. So there is the website, is basically www.annualcreditreport.com. But if you follow the link, you should be able to pull your report. It's not necessarily going to give you a credit score, but it's going to be a nice guide to use to see what's showing up on there. I often hear most of my customers tell me, well, I looked at my credit score on Credit Karma. I'm not against Credit Karma. I just don't agree with their scoring system, and most times the score is incorrect. So yes, it's a great guide, but do not think because Credit Karma says you have a 700 credit score that is accurate. It varies, it depends. Okay.
Maria, before you proceed, can you tell us what is the minimum credit score, for instance, to qualify for a mortgage at your bank?
Sure. We have different loan products for with different credit score requirements. We have as low as 620 with the FHA loan, and we have a 640 credit score requirement for a care product. It does have some different underwriting guidelines that we have to follow, but the minimum is 620. We do not have any other loan products that go under that credit score. The higher, obviously, the better, because then also your rate is lower when you have a higher credit score. So, but 620, we should be able to do a FHA loan as long as they don't have a lot of late on the report. FHA tends to be a little bit flexible when it comes to credit, but the only thing with FHA is currently we don't have any grant assistance available that we can use with the FHA. So if you are going to go that route, yes, by all means we can, but then the borrower will have to come up with all the funds for the closing, the down payment, insurance, and everything out of their own funding because we don't have any funding available currently.
Thank you.
You're welcome. How to establish or improve credit. That's when I don't assist customers with helping and improving credit because, you know, that's not what I do. That's why we have our partnerships such as UCC, and I will continue to mention their names throughout the whole presentation. They're a great resource. They can help you improve your credit if you think you have any issues on the credit. If you don't have any credit, we do offer products at Associated Bank to help you establish. We have a secure credit card that you can open to start establishing credit. Other forms of credits are alternative credits. For example, we can do We Energies as alternative credit. However, if you're gonna use alternative credit, you gotta make sure that that's paid on time. So the one advice I give everyone is put it on auto pay, so like that you don't forget. Same thing with Spectrum. If you're gonna use Spectrum as an alternative credit trade line, and what alternative means is that it does not show or does not report to your credit reporting agency. Those we can all, in most times we can use them with our CARE product, which is one of our portfolio loans, but you have to show me 12 full months of statements and show me that they have all been paid on time. So that's the ways that you can, you know, establish or improve your credit. And like I said, to improve the credit or to fix something on your report, I'm always going to refer you to either ACTS, Housing Resources, or United Community Center. How much do I need for a down payment? I think that's the next slide at your end. I'm so sorry. Okay, so how much do I need for a down payment? That's going to depend on very different things. Credit is one, what type of home you're purchasing is two, whether you're purchasing the home to occupy it or to as an investment property. That's going to depend on those three things. So if it's a single, if it's a duplex, all that's gonna have a different down payment amount that you're gonna need at closing. We have flexible loan programs for first-time home buyers, but all of those are also going to have income restrictions. So it's important that you sit down with us and we can discuss that a little bit further. I think we can go to the next slide. Closing costs, it gives you, on this slide, it just gives you a list of what the closing costs can be and what each one of them are. In Wisconsin, the fees are a little bit different. For duplexes, usually if it's owner occupied, it's gonna be a little bit above $2,000. For a single family, it's like $1,800. For investment property, it's really hard to say because we have to submit the file first to see what kind of pricing it gives us on that investment property, and that's how we will determine how much the actual cost is. But those costs will cover escrows, property taxes, interest, origination fees, recording fees, survey fees, appraisal, insurance, private mortgage insurance, title policy, and any loan discount if it does apply. On the next slide, we're going to discuss about points and what points are. Points is usually additional cost to the loan to be able to do the loan. This is typically more common on investment properties. And what that means is, let's say you're purchasing your loan amount on that mortgage is $100,000, 1 point equals to $1,000. So it's important you pay attention to that. If you see points, what that means is additional cost to that loan. I always try to stay away from points if you can, you know, and investment properties is very hard to stay away from those because it is beyond our control. It's because of the investor Fannie or Freddie determine what those points are going to be. But if you're purchasing a home to occupy, pay a little more attention on that, because that's not very common, at least with us at Associated Bank. On the next slide, we're going to talk about what does my mortgage payment include. The mortgage payment usually includes principal, interest, taxes, and insurance. Insurance, I like to kind of break that one down because it could be two different insurances. For example, you have your homeowner's insurance that will protect your home against, you know, any accidents and things like that. So it's to protect the home. And the PMI, the private mortgage insurance, that insurance is really to protect the lender. And I'll explain it a little bit further. If you are buying a property with 3% down payment, we have to, most loans will have private mortgage insurance. And the reason why I say most loans is because we offer a product that doesn't have PMI, and I'll explain that further. The PMI protects us as a lender. Since you're not doing a 20% down payment, we have to have the 20%, that PMI to protect us, the lender, in case you're going to foreclosure. As a bank, Associated Bank, we're not in the business to take homes away from our customers. But if we have to do the legal proceeding and all of that, it will cost money. And that's why that private mortgage insurance is added to the loan in most cases. The CARE, like I mentioned, we have that CARE loan product. The CARE loan product has no PMI, but it does have income restrictions. So that's why it's important you sit down with me directly, and then we discuss the different options available to you depending on your particular situation. Here we're also talking about escrows. For example, that insurance and property taxes, we put those funds into an escrow account that we establish in your behalf. So when those payments are due, we pay it directly from that escrow account. So for example, when you pay your mortgage payment, you're paying principal, interest, taxes, and insurance, right? So the taxes and insurance, we will put into that escrow account. So the next year, when your insurance is due, guess what? You don't have to come up with those funds. Those funds were already in that escrow account, and we will pay it in your behalf. The one thing I always like to mention is when you buy a property and you do a fixed rate mortgage, the only thing that can change on that mortgage is your taxes and your insurance. And those are the two things we have no control over. So sometimes we do have to adjust those escrow accounts accordingly if the taxes or the insurance do go up. Any questions?
There are no questions on my side.
Thank you. All right, what kind of mortgage is right for you? Well, that's gonna be determined when you sit down with your loan officer, and then you discuss your particular situation, what's going on with your finances, how much money you have down, all of that. So it's important you sit down. We will never make a decision in your behalf. We're gonna give you what's available to you based on your situation, based on your credit score, based on how much money you have. And then we can, you know, if you only qualify for one loan product, I'm going to tell you, okay, this is the product you qualify for. However, you still have to be the one deciding if that's something you want to move forward with. If you qualify for two different ones, I'm going to show you, okay, you qualify for this and you qualify for this. Which one would you prefer? Because at the end of the day, the one that has to make the decision is you. Okay? We always want to make sure we choose products that don't change, but like I mentioned prior on the prior slide, we have no control of what the city does if your taxes go up and if your insurance goes up for whatever reason, because everything seems to be, you know, increasing in prices, and taxes are definitely going up year by year. The next slide, we're going to talk about fixed rate mortgages. In this market, I always say if you can go fixed, do a fixed loan. Rates are still very, very low in my opinion. I mean, it's, once again, I will reiterate, it depends on credit. So the higher your credit, the higher your score, then the lower your interest rate will be. But if you can go fixed, do fixed. The only exception to that rule would be if you decide you're only going to be in the home for 3 years, then you can go with the ARM product. And usually ARM products, the rate is slightly lower than the 30-year fixed product. But I'll use this as an example too. When I bought my first home, I said I was only going to stay there 5 years. Well, it didn't plan out that way. I ended up staying in that home for 15. So if you can stay on a 30-year fix, always stay on a 30-year fix, especially in this market that the rates are still very, very competitive. The advantages of being on a fixed rate is, then you don't have to worry about your principal and interest changing, because that's always going to remain the same. But the rest can change depending on the taxes and insurance. Adjustable rate mortgages, what are they? Adjustable rate mortgages are rates that can fluctuate. So we can set up a loan for a 3-year fixed ARM, adjustable rate mortgage. And then after the 3 years, it could change depending on the market. And then there's caps to those loans, but the cap is 6% above whatever rate you're locked up. So every year it could go up 2% up to a maximum of 6% in addition to what your rate already is. So if you can go fix, go fix. That's what I would say. Special loan programs available. I mentioned a little bit of the special programs throughout the whole presentation, but I will reiterate the two that I tend to talk about the most, which is our grant, which is free money basically. It's like a gift essentially. Is our PATH funds. It's called PATH, PATH funds. And it's a $4,000 grant for given immediately the day of closing. $4,000, but there is an income restriction of $67,040. And the other restriction is that it has to be a conventional loan. It cannot be an FHA loan. That's why when I mentioned FHA earlier, I said we have no funding is for that reason, because this grant can only be used with conventional lending. We also have, we don't have a no down payment program. The reason why we say it that way is because sometimes I've seen in some cases, the customer has to bring no money down because we gave them a $4,000 grant. In some cases, they opened the account with Associated Bank and their first time home buyer, and we gave them an additional $500 towards closing costs. And in some cases, I've had customers bring zero money to closing. So that's why, and sometimes, some cases, it will be a no down payment because of those two scenarios. Also, I want to mention with our PATH grant, if you're also getting a separate grant from UCC, ACTS, or Housing Resources, we can use those grants together. We can use them in conjunction. So if you get 4 and you get 3 from the other agency, we can tack those two together. Unconventional loans, because I think that the grant agency also has those same restrictions. We have special programs that are less than perfect credit. It allows for a little bit of late pays. Most times we don't worry about medical collections, but we still have to worry about those credit score restrictions. So that's why it's important you sit down with me, and then I tell you exactly what to do and what you qualify for. And then if you need something repaired, I'm going to refer you to the counseling agency. And most times I will also tell you, ideas of what you can do. Now it's going to talk to you about the realtor. Once you have that pre-approval, then you go to the realtor, and I don't talk too much about the realtor portion of it because that's really, their expertise, not mine. But I will say this, it's important that you are comfortable with the realtor that you're working with. Make sure that he's working directly for you. And I'll say too, it's important that you feel comfortable with the loan officer as well, because this is a big transaction. So you have to feel comfortable. You have to feel that you trust them. Otherwise, then find someone that you do trust to make sure that they're going to help you out. So they're gonna, the realtor is gonna guide you through the whole process when it comes to the offer part of it. I help you with the financing. They're gonna help you with the offer, what type of property to look for, what you want. I always give the advice of, sit down, put a plan together. What's important for you, what you can live without, and what you really need to have on that home. So I will always reiterate, it's all about planning, plan. Put it in paper, write it down, and then you talk it over with your realtor. Oftentimes I have customers that come to my office, and before they came, they had 1,000,005 questions, but what they're sitting in front of me, well, now they don't sit in front of me, now everything's over the phone, but they would come and sit in front of me and they just they go blank. They just can't think of what they were going to ask. So that's why it's important you write it down and plan. Everything's going to, write down everything, all your questions, because otherwise you will forget later. The realtor is also going to provide you with a list of properties. Most times, I don't think they're giving physical lists anymore. They're sending you emails with different homes available, and that's how you can start looking. And then, like I said, the next slide says begin for looking for homes. That's when you plan and you list down what's important to you. Okay, I need a 3-bedroom, 2-bath home with a 3-car garage. Okay, perfect. You need to know exactly what you're looking for, but be mindful of your budget. Sometimes we want this big house with 3 bedrooms, 3 bathrooms, but we don't have the budget. So let's just be, especially in this market, let's be realistic of our budget before you start, setting up the wrong expectation to the realtor. Unfortunately, it's a seller's market, so everything is top dollars, and then everything's going for way above asking. But just you have to follow their lead in this market because they're experts. They're going to tell you that's not going to fly, but also be careful. The next, once you've found a home, when you found the home you want, that's when you're going to determine with your realtor how much you're willing to offer. All of that's something that you're going to discuss with your realtor directly. The next slide is determining the amount of the offer. That's all stuff that you're going to do with the realtor directly. Excuse me. She's going to do like a market analysis in the neighborhood to see how much the houses are selling for. She's going to share that information with you, and that's how you both can come with a decision how much you're willing to offer on that property. So once again, this is stuff that the realtor usually covers. Earnest money. The earnest money is usually the good faith deposit that you will give on the home. And that deposit is also used towards your down payment. So that's counted as part of your down payment. Typically it's 1%. In Milwaukee, I've seen that it's more $1,000, $2,000. However, it's gonna depend on that seller. If you want to make sure the seller looks at your offer, if you put more for the earnest money, it's gonna make your offer look stronger. So just follow the realtor's lead basically on this particular subject. We're gonna skip over the making the offer because that's really gonna be the realtor. Excuse me. I'm gonna go on the slide that says home inspection. This is one of the ones I like to kind of reiterate because I know it's in this market, unfortunately, they're waiving a lot of inspections because of strategy. So if you're thinking that's the route you're gonna go, I always say, make sure that if you have someone that knows more about homes, take them along to go see the home, just to make sure that you look at the condition of the property. I always say to my customers, those are gonna be the best $400 or $500 you're going to spend, because you're gonna be able to determine if there's any defects to that home or any deferred maintenance that you need to be worried about. I mean, they tell you so many different things. We are not experts. When you go into a home and you look at a basement, if you're not basement expert, you're not gonna know if the basement has an issue. So that's why it's so important you hire a home inspector. I know in this market, because of the competition that's out there, it's often they will waive that inspection. I always say if it's something you don't have to do, don't do it, because you could regret it later. I had a customer that did that, and then she called me like 2 months after, and she's like, Mari, the water's coming in the basement. I don't know what to do. And unfortunately, that could have been something that could have been discovered with that home inspection would have been done. Us as a lender, we're not gonna have that requirement that you do the home inspection because it's not part of the loan process, but we will always, that's why we like to kind of cover it and talk about it, but we will always encourage that you do that home inspection. But once again, talk it over with your realtor, follow their lead, but also be mindful that of the importance of, of doing that home inspection for that property. You never know if they're hiding something. Sometimes the basement's finished and they finish the basement. They made it look beautiful, but how do you know if there's something hidden? You never know, right? The next slide, we're gonna talk about, and I think my system is not wanting to cooperate with me. What can we expect at application? Well, I'll tell you this now. Expect for me to ask you 1,000,005 questions. And all because I need to make sure that, we submit a complete file. So because if we submit a complete file, we're gonna get a clean commitment letter, a clean approval. If there's anything that you need, that I'm not aware of, that you think that could be important, mention it to me. Remember, I'm here to help you. I'm not here to judge you. I'm just here to guide you through the whole process. I'm always gonna be very honest, very sincere, very transparent with you. And I'm gonna tell you exactly what to do and what not to do. Excuse me. I will mention again, no cash deposits, because that's one of the most common ones. No moving money around. If you're gonna open the account with us, by all means, open the account, but don't transfer the money from your prior institution. Leave it there, no big deal. Unless you're gonna do a new gift, then I'll say, okay, put it in the new account. But other than that, no. So another thing, if you have a family member that's gonna give you a gift to help you buy the home, that's completely fine. Just make sure that it's a check. Make sure that you deposit that into your account. Take a picture of that check too. Deposit into your account. I'm always gonna send you a gift affidavit to be signed by the donor, whoever's gifting you that money, so they can, document that that was a gift to you, that it's not a loan. We will not accept a loan. It has to be gifted funds, and it cannot be cash, ever. Another thing is, if you're doing a FHA loan and it is a gift, we're gonna need the same documentation in addition to the donor's bank statement to make sure that the donor did have that money in their bank account. I'd like to mention that just in case if you're deciding to, and you're leaning towards an FHA loan. The next slide is gonna talk to us about what happens next. So when we submit everything, we do all the paperwork, we sit with our customer, we submit the application. The application goes to processing. Once it gets to processing, it goes to decision-making, which we call that an underwriting department. And then the underwriting makes a decision on the loan. They send us the loan approval. Sometimes they come back with some conditions. What does that mean? They want additional information or updated information. That's why it's important when you do get that approval letter that you read it carefully, because a lot of my customers get really excited and they fail to read the commitment letter, and then I don't have everything I need. So always make sure you read everything carefully. Once everything is clear, we send the file to pre-closing, then it goes to closing, and then voila, happy day. You get your home, the keys to your home, and then you're pretty much done with that transaction. Another thing I'd like to cover is what you do the week before closing. Just make sure everything's scheduled, that you have submitted everything we needed, and not really a week before. I always like to say 10 days before, because of our timelines now. It takes a little longer for review. So I like to say 10 days before closing, make sure everything's scheduled, make sure you already send me the insurance, make sure you already send me any conditions that could be pending. So just make sure that, we depend on you a little bit because of the volume that we currently have, for you to send us the information without us having to constantly call and remind you that we need that information. I make it a habit of sending my borrowers an email with all the steps that they have to follow, what the deadlines and everything. So just make sure when you do receive that from your loan officer, whether it's me or someone else at a different institution, that you do read that very carefully. Closing day, that's the happy day. Today, I unfortunately missed 2 closings because my day has been so crazy, plus I had to facilitate the class. But this closing day is very exciting for everybody, including me. It's when you sign all the documentation. That's the day that you also bring the money that is expected for the down payment or the complete the transaction. and then you read and sign all the disclosures, and and that's when the realtor will hand you the keys to your new home. And we make sure that the deed and title, all that is clear before you get to closing, just to make sure that when you do get your home, that's all clear from any other debt that could appear. I think I'm done pretty much with the seminar, but I know I did include it on an extra slide with all the contact information for the homeownership and counseling organizations. If you need to contact them for the first-time home buyer classes, and they also help with the foreclosure prevention and things like that. And I know in the last class we discussed a little bit of the COVID situation. Nelson, did you want to talk a little bit about that first before I talk about it?
Yes, I think it is important to remember that this is a very important decision in your lives, and that you should do this out of, you really need to plan it. As Maria stated, you cannot do it out of passion, or you might make mistake. I reemphasize the importance of getting your home inspected. I used to be a realtor, very active in the market, and I will not sell a home that I will not inspect. I will not live in a home that I will not inspect. So why will I advise a client to buy a home without inspection? Now, going to the COVID situation, there are a couple of things that I would like you to address, Maria.
Mm-hmm.
The first thing is, has the process changed during COVID? So let's say I am ready to buy a home. I want to do financing. How does it work with your bank? Do I need to call you? What is different?
Well, it's crazy because it's still super busy. It's been busier than past years, to be honest with you. So it's changed in many ways, but I don't know why it hasn't affected the housing market. It's just not enough inventory, if anything. However, I will say this. When we're verifying income, that's the biggest challenge we're having, is because a lot of people were out during COVID because they lost their jobs or because they were laid off for a couple of months. It's important that you let us know that information too, so we can document the file accordingly, because most times it's going to show like your income is not sufficient. So that's why the importance of letting your loan officer know. If you already own your home and you're struggling to make your payments, I know the last thing most people want to do is call the bank. I get it, because it's been stressful for me, and this is what I do for a living. So it's very stressful. So you don't want to call the bank. You're embarrassed. Sometimes it's hard to get through too, because there's so many calls coming through, and then you get impatient. I understand all of that, but please reach out. All banks have different products to help you through the process. We're not here in the business to foreclose on properties. We don't want to do that. We will always work with the consumer. It has to be realistic too, though. So they were different. They got very creative during COVID, and there still are, because this is still going on. But you need to reach out directly to the bank. The servicing department will give you different options that they can, how they can assist. Or I have provided homeownership counseling organizations that are also trained in foreclosure prevention and all of that. They can also be a great resource for you to contact in case that's your situation. But first, like I said, we reiterate, first contact your bank, make sure you let them know exactly what's going on.
Thank you, Maria. Any closing thoughts that you might have? Anything else you want to say before we close our program today?
If you guys decide that you're ready or you have any questions, feel free to call me. My number is 414-902-2793. Sometimes it could be any questions. If I cannot help you, I can always find you the resources, or give you information to someone that could help. One thing I do ask for is a little patience. I am bombarded with volume, so I'm a little behind returning phone calls, so usually 48 to 72 hours right now. But I can guarantee you, if you send me an email, it's probably a lot easier, just because I can get to the email a lot quicker. And my email is maria.valentin@associatedbank.com. If it's something that I cannot help with, I can always give you information of who could, or I can refer, Fernando or any other counseling agencies. I can send them an email also asking for them to reach out. And again, thank you, Nelson, for having me today.
Well, thank you, Maria, for joining us and being part of our Mas Fuertes initiative, our bilingual recovery series for our community. Remember that the Chamber and the Latino Entrepreneur Network are hosting this. Tomorrow, we have a very special program. We're featuring 4 entrepreneurs in the area, and they're not the usual suspects. Typically, when we have the Hispanic Heritage Month, we keep hearing about the same 4 people everyone wants, features every year. uh, and we're trying to do things a little bit different and providing a venue for individuals that don't get the opportunity to talk and share the story with pride um, in this system. So we will have a Zoom meeting tomorrow at noon. We will have 4 exciting entrepreneurs that are going to share their life story, how they made it to Wisconsin, how they became entrepreneurs, what challenges they're facing, what tips they have for people that might want to start a business. And we will continue with our Mas Fuertes Mondays and Thursdays, which is all on educational finance. So we will not see Maria next Tuesday, but we'll have another financing professional talking to us about commercial credit. So you're trying to start a business and you're a little behind understanding what is required. How do you tap into a lender? Please do tune in with us next week. Finally, I just want to share the information on the chamber again. You want to contact us or you want to contact the Latino Entrepreneurial Network, we share the same phone at this time for this program is 414-888-2270. Thank you again for being with us. Thank you very much, Maria. We hope to see you soon in another program. Enjoy what is left of the afternoon. And for now, I'm leaving.
All
Take
right. Bye, guys.